Hey there, speculators. It is Roderick Casilli, lead futures trader, t3live.com/futures, where I trade futures on the VTF, the virtual trade floor at t3live.com. And tonight, I'm going to take a quick look at the widowmaker. I guess it could be the widower maker as well, depending on your gender. And that is nat gas, natty gas, as we say. But before I get going, I want to remind everyone this video is for educational purposes. Take a quick look at this risk disclosure and disclaimer. You can pause the video right here to find out more about everything that is written on the screen there. Okay, we're taking a look at a daily chart of the February 20 natural gas contract. We have rolled crude oil out to March, but we're still trading the Feb nat gas at this point, and we are dealing with yet another substantial big gap down. So apparently they're just barbecuing there in Chicago, and the cold snap has not come, and this natural gas contract is just continually finding new lows. It's broken that psychological $2 level there. And I'm actually going to try to do some bottom fishing tonight. Let me walk you through the trade, tell you a little bit about the logic behind it, and we'll see how it turns out. First and foremost, just to familiarize yourself with this contract, if you know very little about how this all works, is natural gas. The symbol is up here. It's NG right there, and it trades $10 per tick. Okay. And if you look down here, it's a little difficult to see. That says 0.14, 0.140. It's actually 140 ticks that have so far. That's how you can see that represents the contract being down 4.49%. Sorry, that's a little sloppy the way I wrote that. So that's basically $1,400 of opportunity here on a Sunday evening. You often hear me talk if you watch these videos here at T3 Live. By the way, if you like this content, you can hit the like button, subscribe button. It really helps out the channel. There's a lot of great folks here in the T3 community. We hope that we're putting together good content for all of you. So again, hit the subscribe or like button if you like what's going on here. $1,400 of opportunity just since the Sunday open at 6 p.m. is now about midnight Eastern right now. So within the last 6 hours, again, on a single contract, $1,400 of opportunity in terms of how much range it's actually explored so far. Let me clean this up right here. Let's come back over here. And I'll just give you the trade. I'm going to keep it pretty simple. Let me show you first on the daily. By the way, this is TradingView.com, web-based trading platform. And you can get 20-minute delayed futures data if you have, I think, a premium subscription of some kind. They're going to give you some nice futures data. So you can come in and chart this. The actual symbol, you come in, you type NG, you look for futures, and you're going to want to go to these NG, and you're going to look at the continuous current front month contract right there. So that's what that's how I got to this right here. And this last gap was actually bought. I mean, again, it's held the 21 this entire time. This green line is a 21 period moving average. This is a 200. Excuse me. This is a 21 EMA. This is a 233 EMA. We have we gapped and then gapped from let's say the 230s and then found our way up to about 360. So that's about $1,300 per contract. And I'm kind of looking for the same thing here using this psychological level of about $2 is what I'll be shooting for. By the way, I'm not going to get into what that $2 represents in terms of its British thermal units is how natural gas is traded, but you don't have to know anything other than it's basically $10 per tick, and so there's a there's 100 ticks between each of these price increments. From 1900 to 2000 is going to be 100 ticks. From 2000 to 2100 is going to be another 100 ticks. So I'm just going to be bottom fishing this day. We'll look at the chart again. I'm resting an order just above 1830s. Let me just move back to this over here. We can take a better look there. So I'm resting an order 1835 with a stop at 794. Okay, so 35 plus 6 is 41. That's $410 of risk. If I do get filled on here, I'll be stopped out. If we break below 1800 or one spot 80, 180, we call it. I'm saying 1800. It's 180. We break below 180 or what I will call the 800s. then we're wrong. That's our line in the sand there. That probably put this contract down 6-7%. I'm not too good at math. Went to California schools. By the way, speaking of math and fundamentals, there are a lot of inputs into the commodities complex, the softs, the grains, the energies. I'm a purely technical trader. I have no idea other than their natural gas inventories came out on Thursday, as they often do. I have no edge fundamentally about anything that has to do with these commodities, so I'm just going to trade them purely technically. That's what I do here. So this price is below S3, the S3 pivot. We're well below the T line, which is our 233 EMA. 950s are our POC, and 880s is the value area low. So again, just a bottom fishing expedition using this reaction low that we hit on this opening candle. Actually, that was the second 30-minute candle following the gap down open, yet another gap down open. So again, I will be going to sleep, waking up in about, I don't know, six-ish hours from now, and maybe we get lucky. We'll see if we get filled and we have a good price there. And our target would be way up here at 078s. Now you'd say, how is that a target before you're actually in? If for some reason there was a massive short covering rally and we actually broke back up above 2, moved another 78 ticks, I'm okay to actually be short as an initial entry right between R1 and R2 and below T-line, using this T-line as potential resistance. So we'll leave it there for now. This is just a trade. We'll see how it plays out. I'm only going to rest it for this evening, and I'll probably leave that level in there for tomorrow's session as well, but it's a shortened session because of the holiday. If you'd like to find out more about the opportunities that 23-hour markets give you, what you can do after you watch the football game, Niners in the Super Bowl again. What an ass whooping they put on the Cheeseheads, huh? The game wasn't as close even as the score shows. You can pop over to t3live.com/futures and find out more about how we trade the futures markets for daily income, and also take advantage of some of these what I'll call maybe price dislocations or opportunities that exist during the overnight sessions, where there are potentially opportunities to pick up some of these things when people are getting a little panicky. This wick down here was a panic sell. We have definitely filled in some of this price gap, some of this price action since there, but if you watch that in real time, it was like, wha-bam! And then we came right up here and closed and been consolidating. You can see actually as I'm making this video, it's looking like they're just trying to hold the 906s here. All right, we'll leave it there for now. Again, my name is Roderick Casilli, lead futures trader at t3live.com/futures. I'd like to remind you to always trade like you mean it. Thanks.